All right, is this market ready to go higher now that Europe seems to be stabilized and investors are somewhat calm? I'm looking for a possible earnings warning season that is bigger than we've had before. Last week we had DuPont and Texas Instruments, and this morning we get Intel. All right, Steve, what are you looking at for a possible warning season coming up?
Yeah, unfortunately, it does seem to be heating up a little bit more than the past. The Intel one is kind of easier to write off as saying that is a unique event to them. This is not about worldwide demand.
Hard drives possibly due to the Thai floods,
yeah,
right?
So
supply issue.
But the Texas Instruments, the DuPont, and DuPont, very broad base use of their chemicals, worldwide demand. That's a little more ominous. But here again, people are just talking about this might be just an inventory shifting kind of thing, and then that comes flying back in next quarters. So for right now, definitely keeping an eye on it, but it's not stopping me from having a slightly more bullish slant on things.
Right. Okay. What are you seeing in the broad trends for, say, the S&P 500 in terms of earnings? Are we still on pace for, say, $105 next year?
Q4 should be fine. 105 maybe a little bit problematic, maybe not exactly at 105, a little bit less than that. I think the European picture is quite clear to the market. The Chinese situation may not be that much. How much is China slowing down? They have been easing lately. Is it basically a sign that they have overcome the inflationary pressures, or they are scared? They're seeing far more slowdown than the market has been pricing in. So it's the uncertain Chinese picture that will kind of weigh on the earnings outlook for 2012. We will hear more in January as these companies and management teams come out and give us guidance for the rest of the year to get more clarity on that. I would say the risk is to the downside.
Yeah, because China obviously is, Europe is a big market for Chinese export,
right,
just like we are.
That's right.
All right, what are you seeing, Kev?
Well, check this out. I just read something over the weekend. President Hu in China said over the next 5 years they are hoping to quadruple their imports from $1.4 trillion to over $8 trillion. So, if they start buying more goods from abroad,
sounds like some massive stimulus to me.
Yeah, that is huge. So that could bring Europe out of their doldrums. It's going to have a huge impact on U.S. So yeah, it's true. Earnings are coming down, but we're expecting this based on what was happening in Q3. I think that could be a counterbalance catalyst. So very interesting.
I want to see that report. That was you talking?
Yeah.
By the way, after I did CNBC this morning, I did a taping for Phoenix TV, which is just broadcast in China, and apparently President Hu watches it. So I hope I didn't say anything that he doesn't agree with.
Yeah, Kevin, was that natural resources or actual finished goods that they...
Finished goods, because they're trying to increase domestic demand. Now, a lot of it is going to be in resources and this kind of stuff, but they're trying to increase domestic consumption. That's going to have a huge positive impact on the entire world.
Right. And I pay attention to CNOOC, which is the Chinese state-owned, offshore driller that just is acquiring assets everywhere. They keep nibbling at the U.S. They're doing stuff with Petrobras down in Brazil. And apparently the South China Sea has deposits that aren't even known yet. So, I'm bullish on energy. Hopefully they don't find too much in the South China Sea. It's going to kill my outlook. All right, Shiraz, so back to S&P estimates. Where are our estimates? Are we sort of in this phase where we're just, creeping along, or are they going to start dipping into next year?
I think they will start dipping.
Okay.
The reason I'm saying that is again about this macro picture. We have basically peaked in terms of margins, in terms of the top line growth that we have been seeing lately. Most of the growth over the last 3 quarters has been coming from top line gains. The margin expansion that we saw earlier on in the earnings cycle has effectively tapered out. For a number of sectors, in fact, margins on a quarter-over-quarter basis have been downtrending. So now if you have a macro picture that's relatively iffy and relatively softer, then you don't have that top-line growth either.
Right, and European estimates go further south, it's going to tag us too.
That's right.
All right, back with Stock Picks.